What's up, guys? Welcome to an Entrepreneur Vault episode. Today we're about to be talking about the money one-on-one, and we're going to be focusing on how you can be able to drastically change your finances without increasing your income, okay? And I think it's very, very important for a person to be able to understand how they can be able to drastically change your finance games right now and get those financial gains before actually increasing their income, right? Because you have to think about it the same thing as working out, right? If you don't work out on your diet, if you don't work on how your routine is, all those different things, you can be able to really just start working out, but you're not gonna be really efficient in what you're doing. So you might be putting a lot of energy in, burning a lot of calories, but the output is not gonna be as well a person who is following a certain routine or diet and how they're supposed to get ripped, right? So in today's episode on how you can be able to drastically change your income, we're gonna be looking at an example of how a person basically works out and becomes ripped, right? So the first thing a person has to do is follow a certain routine, okay? So that means you're following a certain diet and you're following a certain workout routine. Because if you just decide to just work out, yes, you can be able to, lose some weight, you can be able to do this here and there, but you're not gonna be as optimal as a person who's following a diet and a routine that's been proven to work. The first thing you need to do for your new whatever routine for your money game, your finances, is gonna be this. The number one thing is going to be you need to understand all of your different cash flows, okay? You need to understand how much money is coming in. Now, this is usually the easiest part because usually most people only have one income source. Sometimes it's two, sometimes it's three. But basically figure out how the money is coming in and write those things down and be able to see the track record for the last 12 months and be able to know what the average is down, okay? The next thing you want to be able to do now, this is the more difficult part, the part where nobody wants to do. So the part where you're putting the income in is basically like you saying, I'm going to start working out and I'm going to get on a treadmill. I'm going to just start lifting some weights. Isn't that part anyone can be able to do? Now, the hard part is actually following a diet. Understanding how many calories you're putting into your body and how many calories you're burning and how many calories you need to be able to get that certain body type into the most optimal way. So what you need to do in this category here is actually be able to look at how much money you're spending in your monthly statement. You want to look at all the different places where your money is going out of your bank account. And you want to write down all those different things now, okay? You want to be able to know how much money is going towards entertainment, it's going towards food, it's going towards even water, like every single thing that's going to be happening, okay? Now, in the sense of you running a company, you should already be doing this for your accounting. You want to know how much you're paying people, how much you're spending money towards certain services, how much you're paying towards contractors, all those different things need to come in and you need to calculate that, okay? So now the next thing after you've done that is you're basically been able to understand where you are right now. So the first part is understanding where you are right now. And that's what you usually want to do when you're starting to work out. You have to know exactly where you are now before you decide how you're going to be able to get where you need to get to. So now the next second part is now where you're going to be able to actually start doing the workout routine itself, or really how to now exercise into changing up your financial gains and game without really having to really increase your income. The first thing you're going to have to do is create rules. You're going to have to create a schedule. And for me personally right now, I have a schedule where I do weekly allocation of all of my income and all of my expenses. So I basically have a category of where I put my money into, right? I'm gonna talk in the sense of my holding account, right? So my holding LLC where I manage investments, right? So I have a regular business checking account. That's the main checking account where most of the money is coming in, the operations and stuff like that. Then I have a capital investments account. Then I have a savings account. Then I have a credit account. So I have 4 different accounts where money is flowing in and out, okay? So the first thing you want to be able to do for yourself is be able to understand all those different accounts. And of course, I have another account where I'm doing into my real estate investments. I have another account where I'm doing stock investments, and another account that I'm doing commodities and currencies investments. That's the category of investments, and I'll talk about that later. So the first thing you want to be able to do is note down all the different expenses you have to be paying at the end of the month. By expenses, I'm not talking about your leisure, I'm not talking about your entertainment, I'm talking about your expenses for survival, okay? I'm talking about if you're paying for a mortgage, if you're paying for rent, if you're paying for, electricity, if you're paying for water, write those things down and note those things down. That's gonna be your top priority expenses. So that means regardless of whatever comes in, those things have to be taken care of for you to be able to survive. The same thing for your company. You're gonna have certain expenses that are just gonna be raw bottom right at the base that you have to pay off each and every month. Now, once you understand those expenses, now you need to look at those other different things that are left over. This is the part where you need to start cutting down on that junk food. It's the same thing for working out. If you start working out, you write down your diet plan, you're gonna have to start cutting off junk food, and you're gonna start instead focusing towards more healthy foods. So that cash flow that you were talking about coming into your bank account, it's not necessarily gonna mean now the money that's left over after we've decided what your main expenses are, you're gonna spend that on anything. No. That money is going to start going to a healthier diet. So junk food diet in the sense of working out, it can be chips, it can be chocolate, it can be all different snacks here and there that just really are empty calories. So now what you're going to be able to do is not have empty calories for your money. You're going to be more fulfilling that's going to be healthy for you. What this means is investments and a good way to be able to save money in case of any emergencies or rainy days, right? So the first thing you're going to have to do is basically figure out where you are right now as far as your status. So if you already have some money for rainy days, or you saved up enough money that can be able to cover like 3 months, 4 months of expenses, depending on really where you are and what age you are, you want to be able to look at how far you can be able to stretch that rainy day savings. And then after you have those rainy day savings saved up, then you want to start looking into how you can be able to invest your money. So what you always want to do is kind of follow the steps I've just kind of been breaking down on the second stage here. You have to be able to start from your main expenses for survival. And then once you have that survival expenses paid off, you're going to be able to look at how much cash is left over. The leftover cash should really be allocated into different accounts. I gave you the breakdown of my allocations. I have maybe about 15% of my cash flow. Yes, 15% of it ends up going into my capital investments. No, not capital investment, the operations, right? My main checkings account for the holding account. And then next it goes into my capital investments, which is usually about 50% of my money is going to capital investments. And really for me, it depends on what time and season, because that money is going to be reinvested later on into other different categories. And then I always invest about 8.33% of my money every month into real estate. So that's money that I just basically keeping there. The reason why I do 8.33% is because that money, I cannot withdraw it at all because it takes about 3 to 4 months to get that money back after I put it into that investment. So I really don't want to put that a huge category of my percent into that because it's going to be a very long-term compounded interest growth investment. And then I do have another investment where the capital investment goes into, I'm going to be using that money later on to be able to invest into the stock market and also be able to trade in the commodities and currencies market through the Forex market, right? So those are different things that I look at when I am allocating my assets. And now finally, when you've been able to calculate all those different things, then you want to be able to get a budget for yourself for leisure and entertainment at the end of the month. So for example, for me, if I look at my monthly costs for leisure and entertainment, it's maybe going to come down to like 5% of what my actual cash flow is. Sometimes like maybe 2% of what I'm actually making at the end of the day, because I don't really buy clothes or shoes or eat out a lot. I'm basically maybe only paying for my music subscription and my movies and TV shows. That's really about what I'm spending on, and PlayStation. And PlayStation I'm only paying every 3 months, and I only buy one video game, which is basically Call of Duty. I just only buy that once a year. So my expenses for leisures are pretty much basically almost none, but they're really not even there. So once you're able to figure out what your leisure and entertainment category is, what you really need to be good, not excess. You don't want to be excess when it comes to this diet, right? So that's the next part, which is the biggest part, which is number 2, is the dieting part. Now finally, number 3 is all about maintaining that diet and maintaining that workout routine for helping your financial gains, okay? So what you want to be able to do is basically every week, okay, every week, you want to be able to understand all your different cash flows. You want to make sure as soon as you get that check, you want to make sure your cash is immediately going into those different accounts, right? So for me, for example, I usually pay my expenses on a weekly basis, and also I pay it on a monthly basis, right? Depending on when really the companies that I work with charge me and all those different rates and stuff like that. So depending also when you're getting billed for your rent, or when you're getting billed for your water, all those different things, you're gonna be able to know when you get billed and charged, so you can be able to plan on which week you're gonna be allocating your assets or cash in a certain way. So what I basically do every week is I basically go in and I make sure as soon as I get the money, if I know I already paid off my expenses, I immediately put the money into those different accounts. So I don't let the money sit in my checkings account, because when it sits in your checkings account, you're going to end up spending it on other different things. So you're going to make sure you allocate it to those different portfolios and folders. If, for example, you're paying off a loan, you're going to make sure you pay that loan off first before you put money into other different levels and priorities. So you're going to make sure your accounts are going to have different priority levels, and you're going to be able to allocate allocate into those levels first, okay? Now the next thing after you do that is basically where you're gonna be able to look into managing that, okay? So as we talked about before, the one part that I left off and I didn't go too much in detail is, of course, your capital investments category. And as a capital investments, as a holding for my holding LLC, where I do my investments from as a company, for you, it might be your personal account, right? And you want to be able to create maybe another separate account where you can be able to track your money, or you're going to be able to use it to invest for later on. So what I mean by invest later on, let's say for example you plan to later on maybe invest into a piece of real estate. Maybe you want to be able to go purchase a certain volume of stock once you get a certain saved up cash, where you can be able to have money for rainy days. That's basically what I'm talking about. And by the way guys, do not have only a savings and checkings account. And then honestly, I don't know why people do this, okay? Because if you only have a checkings and savings account, what's gonna end up happening is this. It's gonna be hard for you to save money, because if you decide I'm gonna start saving 30% of my money every end of the month, and you put that into your savings account, and then when you really need money, you have to take money out of your savings account. You do not want to get into a routine where your savings account turns into another checkings account, right? So what you're gonna be able to do is honestly create another bank account, create not another bank account, but within your bank account, create another account that's gonna be another checkings account, and have a main operations account. So basically your day-to-day expenses, your month-to-month expenses, have that in the main account. Then have another account that's just only going to focus on your future investments. You want to be able to track what you're going to be able to use for future investments, and that money is going to be a no touch, okay? You cannot touch that money, okay? You want to use that money only when you're going to be investing later on. And then you're going to want to have a savings account where you're going to be putting money for rainy days, and also you're going to be saving money as in general as a good routine. That's what you want to be able to do to get started. As I mentioned before, for me personally, I'm running on multiple accounts. And of course, at the end of the day, you end up having your credit account, whatever it might end up being. Sometimes for a business, you have a credit account, and also you have a business credit account, business credit line account, okay? So you're going to be able to make sure you know how to manage those different things. And I know this video had gone through a lot of different concepts. It's because I just want to bring a kind of an overview of this, and then later future videos, I'm going to dive deep into the 3 different categories that we talked about, because this video is more of kind of an introduction, which I personally feel like if you start putting this more in practice, you're going to see a major drastic change in your money game. And I'm telling you guys the honest truth here. You do not have to increase your income to be able to maximize the assets you already have right now. And the reason most people do not maximize their assets right now is they do not know what's an asset and what's a liability. So they're just mixing those things up in their accounts, and at the end of the day, they just end up getting spit out in just a huge mess, and no one really wants to go through that, okay? Now the final thing I want to tell you guys, depending on where you are on your income level, or depending on where you are in your business, make sure you get an accountant, okay? So I personally do my own accounting for my holding account every week, and then end of the month I have an accountant who basically comes in and makes sure everything is being done well. And for example, this next 2 weeks, we're about to do the last 3 months quarter accounting in a very heavy way. Just make sure everything is hitting the right point, and also he's going to be giving me some advice on how I should be able to manage some of the money and different things like that. So make sure if you are at a certain point where you're getting a lot of cash flow coming in, get an accountant. Even if you are a person who is a personal, as a person yourself, as your own income, maybe every 3 months, every 4 months, you can be able to contract an accountant to be able to just look at your books and just make sure you're doing your things right. And it's really going to be impactful, because you really want a person to give you a different perspective to advise you on how to do different things, all right? Anyway, guys, thank you very much for watching this Money 101 episode, and I really hope this video was able to impact you and help you when it comes to your money game, all right? So to get those money gains, man, you gotta you gotta understand where you are right now. You gotta get into a diet, and also you gotta maintain that diet, and you gotta be able to maintain that workout routine, or in this sense, we're talking about maintain that same money management routine, all right? Thanks for watching. Peace to the out.